as an income tax. So normally I always try to differentiate two types of employment, as we all know. A W-2 employee and a 1099 employee. If you are a W-2 employee, you pay these types of taxes. If you are a self-employed or a 1099 employee, you pay 100% of the Social Security, you pay 100% of the Medicare, and the federal taxes, state taxes, and if applicable, local taxes as well. If you are a W-2, the Social Security and Medicare, half of it, 50% you pay, and the rest is paid by your employer. And every time you get your salary or your reward for any job that you do as self-employment, you just don't pay tax from the gross income. There are three things that we can minimize our taxable income to reach out. So in order to get the taxable income, first, there is something called adjustments, which includes IRA deductions, what Robert and Raquel was mentioning, educational expense, moving expense, things like that. And the second deduction to reach to the taxable income is deductions allowed by the government. We call them standard deduction or itemized deduction. We'll take a look at it in detail in a little bit more. The next deduction is, if you have a business, there is a separate deduction which is not going to be mixed with the first two as a business deduction. So let's say Uncle Sammy said, Robert said, let's have one sample employee. Somebody who makes 60K per year, single starts, and he paid federal tax of 9,000 from his payroll deductions as a W-2 employee. And then he's taking the standard deduction, not itemized deduction. With that, we are saying he makes 60,000. He doesn't have any adjustments because he didn't make any proper financial planning that they were teaching us. And then the taxable income will be the same with the gross income. Next to that, we have the deduction, which is allowed by the government as a standard deduction. He's not going to itemize because he doesn't have expense to itemize. He's not allowed to do that. Then he will take the standard deduction, which is 40,200. So his taxable income is 47,800 only. You don't pay tax 60,000, the taxes that I showed you in the previous page. You don't pay all of it from the gross income. You pay taxes from this adjusted gross income. With that, he was supposed to pay taxes of 6,308. However, from his payroll, 9,000 was deducted. He paid extra, which means his refund is going to be 2,620. Now, I'm trying to, again, like I said, I'm trying to associate it with the financial planning. How about if this person made proper financial planning or take advantage of the tax benefits that's allowed to anybody? How would be the refund changing? What would be the difference? Let's see, one by one. So let's say, for example, anybody, like Raquel was saying, debt management is important. So if students pay, once you graduate, I mean, Robert, when did you graduate?
A long time ago.
So are you done with your student loan payments?
No, I'm done with, yeah. I actually had the Air Force pay for mine.
How long? Oh, okay, Raquel, give us an example. How long it takes to pay the student loan?
Don't use me, I pay cash.
Oh, okay.
I was in the business.
What examples? Okay. Oh, you still have student loan. Okay, let's see how it will have impacted you if you were living in the United States. So student loans are deductible. They are tax deductible as an adjustment, not as a deduction. And anybody who has student loan payments, every year you get the form called 1098E, and it's allowable to have a deduction up to 2,500. With that, this employee, as an example for us, he paid 1,500 interest this year. This interest would have helped him minimize what? It's not going to give him a tax or refund increase with the same amount. But this is an adjustment, then his taxable income would have been 58,500. With that, his refund would have been increased by 329. Okay, you see now the difference? However, sometimes some people make huge payments, which is wrong. Because I'm talking about tax perspectives only. If you have cash like Raquel, you can pay it all. But if you are planning your financial planning, if you are seeing it with tax savings advantage, let's see at the next example. So if you pay 1,500, according to the current rules, it's capped to 70,000. So you can only use it if your income is 60,000. So this person qualifies for 1,500 because his income is 60,000. Let's say another example. If somebody made this year 77K, he's allowed to have a deduction of 799 only. So it's not just always the deductions that you get from the student loans. Another is the retirement account. How would the retirement account will impact your taxes? How would it impact your refunds? Let's say an example. So if you take a 401k, it's a pre-tax from your payroll deductions, you get benefit of it. It grows, but it's taxable. The interest that you earn, which is invested interest, and then the money that was put. However, in 401ks, if you are lucky enough, like the company that I work for, you will have a match. That's also another tax benefit. But if you are a self-employed, or if your company doesn't have any 401k plans, what you can do is you can open an IRA. So to open an IRA, you don't necessarily have to do it in the previous year. When you come to do your taxes, we advise you to put some money by the end of the tax season. Until April 15, you are allowed to deposit money up to 6,000 as a single person. So if this person chose to put 6,000 in the IRA account before he files his taxes, his refund will grow by 1,320. That's a lot of money, right? You get huge refund. However, you have to be careful on this. Your IRAs are taxable by the time it's distributed to you. Next, there is something called quality savings account. I don't think everybody takes advantage of this. This is for people who have kids. It's allowable deduction for some states. For one account, for one kid, both parents can have one account each, which means basically 2 accounts for one kid. And that gives you, for example, in Virginia, if you qualify for 2 accounts, your refund will increase by 460, I'm sorry. So it's also always good to save money for your kids at the early stages every year. So every year you take a tax advantage, tax savings, you increase your refunds. Maybe this is small, but with other benefits, it's a lot. Before we proceed to the other tax tips, I want to talk a little bit about standard deduction and itemized deductions. I had a video on this one in Tigrinya in my own language, but I'll try to see the difference for these examples that we have now. Let's say this person, if he takes a standard deduction, his refund would be 2,620. If he took the itemized deduction and he has a mortgage, let's say for example, his mortgage is 8,000 per year, and he paid taxes about 6,000, and this is the income tax deducted from his payroll. So in order to qualify for itemized deductions, there are 5 types of expense that you need to take into consideration. First, if you have medical expense, again there is a limitation on this because you cannot use all medical expense. It has to be more than 7.5% of your income. The second is the taxes. Here, in Trump's tax laws in 2017, this was capped only to 10,000. As you can see, for example, here, this person has paid 11,000 tax, but he cannot use it all. It's capped to 10,000 only. So, for example, if you are living in New York, the governor was fighting for this. Governor Cuomo, if you have seen some of his COVID-19 briefings, he was talking about SALT. We call it SALT. This is state and local taxes. So he was asking for people to get benefit of it, so that they can use all the taxes they pay. Because in New York, on average person pays 22,000 taxes. So if he uses his 22,000, his itemized deduction will be increased, and this person would have chosen the itemized deduction. However, if this is capped, all these expenses will be limited to this amount. Next, it's a mortgage interest. As you can see, you can qualify for any mortgage that you have paid. And the fourth thing is donations. You can donate as much as you can, and it's going to be added to your itemized deductions. And finally, there is something called casualty and theft loss. Like for example, in disaster areas like Florida that happens for hurricane, if you lost something, you can use this expense as a deduction. But one thing that you have to do here is add up all your expense. If it's more than the standard deduction, which is 12,200, then take it, do as an itemized deduction. But if this doesn't add up to 12,000, you are better off to take the standard deduction. So with this example, this person would have increased his refund by 1,716 had he taken the itemized deduction. So always when you say debt management, whether you have to make like huge payments on your mortgage, you have to be careful. Again, I'm talking about the tax perspectives only. So by paying huge amount of interest, it doesn't mean you get more tax benefits. For example, the state tax, it's covered here. And again, it's not just the interest that matters. It has all these 5 categories matters to take the standard deduction or itemized deduction. Next, I want to talk a little bit about business deductions. This is for self-employed people, like my brother, and a lot of I have friends who do self-employed IT, Uber drivers, different kind of self-employment activities. So every time you report your taxes, it's going to be reported in this Schedule C form. I'm sure everybody's familiar with this form. Here, the expenses that you incur for this business, that doesn't have to do with the adjustments that we saw earlier. That doesn't have to do anything with the deductions. That's separate expenses against your income on that business. So if you are a sole proprietor or independent contractor, you will, or 1099 employee, you will use this form. If you are LLC, you will see the same thing, Schedule C. If you set up your company as a partnership, you will have a different form called the 1065. If it's an S Corp, it's called 1120S. C Corp, it's for corporations. That's beyond the scope of DADA Tax service. We're not yet doing C corporations. I mean, we are limited only for now. Sole proprietorship, LLCs, partnerships, and S Corps. Here, the type of expense that you incur, it depends on what kind of business you are in. But any business has like commute expenses, meetings, and if you are like an Uber driver, for example, your mileage. And at the same time, there is something called depreciation that everybody has to take advantage of, which Trump did, as you can see, the reports from the New York Times. Most of his deductions were from depreciation. Can you go next page now? So this depreciation is reported on this form, 4562. If you have a vehicle, if you are driving, if you have a business and you own a property, you can depreciate it and make tax savings because you will be able to write off everything in that business against the income that you made. Another thing is the mileage that you use always, if you are a driver, especially like Uber or any other like any gig work that you do driving. This is the most interesting part that I always advise my clients. And this is when you calculate the mileage. Here, there are 2 ways of getting the total expenses for this business. One, you can take your own expenses, or you can take the mileage according to the IRS, which is 0.58 cents per mile. So always, when I do my taxes for my clients, I test both ways and consult them if there is an additional expense and take advantage of this mileage. Of course, if you have a mileage, you have to have a log, you have to have evidence, because this Schedule C is the most audited part by the IRS. So you got to be careful on that, but at the same time, you have to take advantage of all expenses that you can write off against your income. So when you say write this off against your income, it doesn't mean just it's going to be written off against your business income. If you look at the previous page, go to the next, previous page. Here, let's say, for example, this person made in this business 4,000K as an income. And his total expense, we talked about depreciation, we talked about the mileage, and other related expenses depending on the business. He has a total expense of 7,750, which means he has a loss of 3,750. So this loss is added with his other income. So now, with the current tax laws, if you have a business, LLC, partnership, S Corps, which we have seen a very significant increase for people to have this opened, especially at the early stage, which is the startup, consultation, things like that. You have a lot of expense, and this expense would allow you to minimize your taxable income. So as an example, this person with a loss of 3,750, his refund would increase by 825. If these expenses are higher, then definitely your refund will be higher. But again, one thing I would like to emphasize here is when you put all expense, Schedule C is, like I say, the most audited part. You gotta be careful, you have to be documented. But at the same time, take advantage of all expense. And if you can do any side business, like for example, in the coronavirus times, people are working from home. So they were doing any side businesses when they are laid off or something else. So with that, if they are legitimately taking advantage of these deductions, that have an impact in their taxes. So, like I said, you gotta be careful, but I like this quote by Phil Knight, the co-founder of Nike. Sorry, the co-founder of Nike. So he said, play by the rules, but be ferocious. Be smart. Take advantage of all deductions. But again, play by the rules. You don't want to be audited. Next is about stock investments. People do trading, which is good. That's part of the financial planning. When it comes to taxes, if you make income, then definitely you'll pay tax. But it's good to have it's good to make income. You just don't, not to pay taxes, you don't have to start making money, right? So these stock investments, if you are bad, like you start now, you make losses, you're not smart enough, then you have some cancellation with your taxes. I mean, if you have been losing every year, you just have to stop it according to the financial rules. I mean, you can't just do it for tax benefits because that's very minimal. Let's see how much is it. So this is a form. Use it for reporting your stock investments. And in 1 year, you are allowed to have 3,000 deductions. If it's more than that, you can carry it over in the next year's income. But these stock investments are differentiated into two: long-term and short-term. So long-term investments, they are taxed at a lower rate. So if you don't have any earned income, not W-2, not 1099, if you just trade, so you pay less tax, which is almost half of the current tax brackets, which we will see later on. And another thing about these stock investments is the short-term investments, they are taxed with the regular income that you have, with the regular effective tax rates. Before I proceed to the next page, I want to say something about the wash sale. When you trade, there is something called wash sale. If you sell and buy within 30 days, you will not be qualified to get these 3,000 deductions. So every time you are provided by TD Ameritrade or other similar companies, they will report to us as tax professionals. When you do the taxes, they report it's a wash sale if they have a wash sale, and that part is not deductible. So if you are doing your tax by yourself, TurboTax or other softwares, and you don't see the deduction, behind the scene, the system is using this form and then disqualify you from the deduction if it's a wash sale. So this is something related, whatever we have covered is related to financial planning. It's a very detailed list. We cannot cover everything. You can come by and consult with me anytime you have any questions. You are welcome. But before I go to the next step, I want to say something about the current tax issues. Currently, as we all know, a lot of people have been receiving unemployment income. So unemployment income is taxable. You pay taxes for federal and state. Like we said earlier, there are 4 types of tax: FICA, which is Social Security, Medicare, federal tax, and state taxes. So you pay only for unemployment the federal and state taxes, and if applicable, local taxes as well. Everybody who has received unemployment income this year, you will be receiving this form. It's called 1099-G. So once you get this form, don't get surprised. You just need to collect it and gather it with your tax documents. If you don't pay taxes when you are receiving this income, always the website, for example, in Maryland, it has been reported that you have to pay tax ahead. If you don't pay ahead, then you will be in trouble, because at the end of the year, you will not just pay the taxes, but also the penalty as well. So if you haven't paid yet, then it's advisable to pay before the end of the year. Other tax tips, which we are expecting to see some changes in the coming months in December. I will have a video about that on my channel, but I'll touch some part of these credits and deductions that you can take advantage of. First, it's about the deductions versus credits. So some people receive confused credits and deductions and how it impacts your taxes. So credit is the amount of money which minimizes your tax liability, or it gives you a refund. Deduction is, like we have seen earlier, it's an expense that minimizes your taxable income. So there are a lot of credits that you can qualify, and it has to be seen on individual basis, depending on your age, your status, married or single, and other different factors. I'll talk a little bit about the earned income in the next page, but before that, let's see in general what are the type of credits that are common by most of my clients and that we see often in so many people's taxes. Earned income credit, tuition credit, child tax credit, federal solar tax credits, and we'll talk about the next tax brackets in the next page. So earned income credit, if your income is in this range, if you have no children, 1 child, 2 child, and 3 child, you should not make more than this range to qualify for the earned income credit. So some people think, like last year when they do taxes with some tax consultants, they have received an earned income and their refund was high. Next year, when they come to you and their income is closer, then they are disqualified to get this kind of credits, and their refunds on their tax will be low. And they blame you. No, you can't do that. I mean, like last year I did this much. That's not how it works. So every year the rule changes, and this is the current rules, tax laws. The maximum credit that you can get is up to 6,500. If you have 3 children, 2 children with this amount, 1 children this amount, and then if you don't have 8 children, it's 529 only. So some people, they are harmed. Let's say, for example, his income is 50,000 with this range, but this year, because he did a good job, he get a bonus in his W2, and his W2 comes up to 52,000. Then he's disqualified for the tax credits. He would rather have, I mean, it was better for him not to take the bonus, right? So it's always, like, you have to see at the totality of the documents to determine how your tax is impacted. Next. School teaching, many students take advantage of. There are 3 types. You can take advantage of this in 3 ways. The first one is American Opportunity Credit. This is for the first degree school payments. Second one is Life Learning Credit. If you don't qualify for American Opportunity Credit, you can take the Life Learning Credit, which is a lower credit than the American Opportunity Credit, because American Opportunity Credit, it can give you up to 4,000 credits, not a deduction. It's a credit. It's a lot of money. So you got to make sure to make your school payments appropriately and see how it impacts your taxes. If you don't qualify for both of these credits, then you can qualify a deduction. It's not a credit now. It's a deduction of up to 4,000 if you don't qualify for these 2 credits. Next is about child tax credit. This year there will not be any change unless some new rules are applied by the end of the year. But from Trump's tax laws in 2017, it's called TAJA, Tax Act and Job Act. This was increased from 1,000 to 2,000, and the phase-out limit, if you made up to 120, I'm sorry, I apologize, this is wrong. It has to be 100K, not 400K. This is for married couples. This is for single person, it has to be 200K. So if you make 200K and over, you are disqualified for this credit, even though you have a child which is under 17 years old. Working from home. This is very interesting because everybody was working from home. Unfortunately, if you are a W2 employee, you don't qualify to get a deduction or a write-off for working from home. But if you make any side business this year and you have a 1099, you can take advantage of your home office expenses, your mileage, your courses, subscriptions, and other related expenses. And remember, this will be reported in Schedule C, which will automatically be followed to your gross income to deduct your taxable income. So make sure you capture all these things. If you come to the DADA Tax Service, of course, we'll capture them all. Tax brackets. So this is interesting because it's confusing for some people. We don't pay a fixed tax rate. So this is for 2020, the tax brackets. It has been changing over the years. And this is how it works. If you make 60,000, like our example, the first 9,800 is taxed at 10%. Only the first. The next, from 9,876 up to 40,000, it's taxed at 12%. So it's a progressive rate. And then eventually we calculate, our software calculates the effective tax rate. And according to the current tax brackets, it looks like this for a single person and married couples. Next. Pandemic-related tax tips. So in the pandemic times, there has been some tax changes, and we expect it to be changed. We expect some rules to be rolled out in the coming months. So far, these are the main ones. I'll touch a little bit about each bullet here. to just make you aware to get you ready for your tax season coming. The first one is stimulus. It's an advance credit. I received it 1,200. I'm sure everybody has received it. But if you don't worry. You will receive this 1444A. All of us will receive this form. And once you have this form, it has to be included in your taxes. It's an advance credit that you have received. It's always very good to have this form within your taxes, even though you have received it, because there can be adjustments if your income was up. For example, if you make more than 25K, the stimulus amount would have been decreasing. So if you didn't file your 2019 taxes on time, you were paid based on your 2018 taxes. So we need your taxes now. The adjustments can be happening. Like there might be some change. So keep this form when you receive it from the IRS, and make sure you bring it with the other tax documents. Next, donation. Again, we have another spelling error here, double O, but it's fine. Due to the CARES Act, donations are now above the line adjustments, which is great. Even if you don't itemize, you can take advantage of your donations. Go ahead, donate. I mean, when I say donate, it doesn't mean you just give it to your family. It's like it has to be an appropriate organization like church and charities, things like that. So this means that the CARES Act is allowing people to make, to take advantage of donations they paid against their income, even though they don't itemize. Can you go back to the, I don't know how far it covers the first page? Back. Oh no. Okay. Here is itemized deduction. So we said earlier, if this doesn't add up to 12,200, you are better off with standard deduction. So your donations are added with the other expense. Let's say now you don't have a mortgage, you just have only a donation. Your total expense will be 2,000. You are not taking advantage of the donation because you will be going with the standard deduction. But now these donations will be separate. You will take the 12,200 standard deduction and take advantage of the donations because it's going to be above the adjustments. Sorry, with the adjustments above the line deduction. Go back. Next, it's about retirement. A lot of people have done early retirement due to the pandemic situation, and they will be receiving this 1099R. So if it's premature, it's something related to financial planning, you will be penalized. But at the same time, there are some deferrals done. I mean, it's not an exemption, it's a deferral for some people. It's good to get this form on time with your taxes, and when you receive this form, always there is a code provided with that form. Is it like a distribution, a rollover, or things like that? And we can do it appropriately with your taxes. There was another one proposal, one very interesting proposal by President Trump. It was called Explore America Tax Credit, and this was initiated after the coronavirus to help the hospitality industry. And he said, anybody who spends on domestic travel, restaurant visits, related transportation expense, you can claim them as a deduction. As a credit. You can get a credit up to 4,000. So when you say credit, there are two types of credits: refundable credit, non-refundable credit. And again, it depends on your age, your filing stats, your income. There are so many factors. But Trump was proposing people for any expense like meal, entertainment, any other expense, they should be allowed to get benefit of their tax. So if you spend now on this kind of expense, you can take a tax deduction. Is it going to be applied? We don't know. But if it does, then make sure to keep all your receipts for the travels that you have done. So for example, today you came to this event, if you spent your parking and other expenses, then you can deduct it. Well, you see these two faces, we have been seeing them within last month. We're not going to talk about election. I'm just trying to compare both of them and their tax plans. So Biden is saying individual tax brackets have to be lifted up to 39% for those who make 400,000 and more. This means they don't have to pay 39,000. Can you go back? Back. Oh, back. Go forward. Yeah. He's suggesting if somebody making more than 400,000, the tax bracket has to be 39% instead of the current 37%. Trump, on the other hand, is saying he wants to lower the middle income rate, which is currently 12. He wants to lower it to 15 or index it for inflation. The second category is the capital gain tax. A good example of this is dividends. If you have a dividend in a company, or if you own an S corp, which I will talk a little bit later on, and you get a dividend, currently it's taxed as a long-term dividends or long-term investments, or what you call, I would say capital gains that you make from your investments. And it's Biden is suggesting it has to be taxed with your ordinary income, which is a lot. But Trump is trying to adjust it to 50% or adjust it for inflation only. Currently, it's 21% for long-term investments. Short-term investments, they are taxed with normal, ordinary rates. Corporate taxes, this is the most interesting part that they are fighting for. Currently, it's 21% after Trump's tax laws in 2017. And Biden is suggesting that it has to be 28%. Trump is suggesting to make it 20%. The fourth thing part is the social security taxes. We have seen earlier in the first page. Can you go to the first page? You have to take it all the way back. Here, social security. Currently, if you make 137,000, you don't make the over amount of money that you make, you don't pay tax. So everybody pays 6.2% for social security and 1.45% for Medicare if you are a W-2 employee. But if you are self-employed, you pay 13%, the total FICA rates. So here, Biden's tax plan is saying, even though you make more than 400,000, you have to pay Social Security. Currently, if you make 150,000, for example, Social Security is paid only for the first 130. If you make beyond that amount of money, you don't pay Social Security taxes. But he's suggesting to make it taxable in the coming tax plans that he has. Trump, on the other hand, he doesn't want to change anything, but there was a deferral done in August, actually. In August it was announced, it was enacted in September because I do payroll. So what he did was, for people to help them with the coronavirus, he deferred the tax to be paid. You're gonna pay it, but you don't pay it now to help you with the COVID situation expenses. So this deferral, he said, if he's re-elected, he's gonna waive the deferral, which is a tax holiday. You don't pay Social Security even though you are a W-2 employee or social self-employment income that you have. Finally, it's about the itemized deduction. We saw it earlier, either to take standard deduction or itemized deductions. Biden is suggesting, because rich people have expenses to itemize, like they make donations, they have mortgage, they pay taxes, they always take itemized deduction because they have expense. I don't have a mortgage, so it's better for me to take the standard deduction if I don't have other business expense. So for such people, they don't take advantage, but others who have businesses, who have mortgage, who have investments, they take advantage of it, and he wants to cut it to 28% of their income. That's Biden's tax plan. Trump, on the other hand, he wants to make the current tax law, which was implemented in 2017, he wants to make it permanent going forward. So as you can see, it's a big difference between these two candidates. Who's going to be the Congress approving? We don't know, but just to give you a little bit of what the presidential debate was about. I'm sure this is a very hot topic to discuss, and we can go ahead and go with it. Next page. So for now, these are the tax tips that I have, but always you can call us, you can come with me, you can schedule an appointment, you can consult me. We can see your tax on individual basis. But in order to come for me, why DADA Tax? Why would you come to me? There are a lot of tax professionals out there. But why would you come to me? Let's see some of the features that we have. So first of all, to any of my clients, I track their refund. Once I file their taxes, we inform them. We follow the website, and me and my colleagues, we follow their refunds, where it is, we inform them until the refund is deposited in their account. I'm not sure you are receiving this kind of quality service from other tax professionals, but that's what we do here. Next. Not just for the pandemic times, but earlier I worked for 50 states, and I have a lot of clients all over the states, and we have the virtual service. If you don't want to come to commute or coronavirus or any other reasons, we have virtual services. We do Zoom that we always do use for other purpose, and we send documents securely in shared drive, and we can schedule appointments in the Zoom. With the Zoom, we can do your taxes officially and securely. Another feature, you don't have to come to our office to sign, or you don't have to mail your documents to us. We have electronic signing services. Every time you file your taxes, we send it to you in your cell phone. We download the app and then you sign, and that's it. So pretty much you can finish your taxes from your cell phone. That's how we try to simplify it to our clients. But most importantly, when you do taxes, it's not about the past year. For me, it's about the coming years. It's about what planning you do after you do your taxes. You might have lost some credits or deductions this year or last year when you do your taxes. And then I will do projection. We'll consult you what you should be doing in the next year. What kind of actions do you have to take advantage of these credits going forward? So for me, it's always when you do your current taxes, this is my slogan. That's going to be your future savings. Based on the consultation and advice we give you, you will be able to save a lot of money. You will be able to minimize your tax liability and make appropriate financial planning. Just like I said in my opening speech, I do this event in support for the community because we learn a lot of financial information from these wonderful speakers, but also we update ourselves for the current tax rules. And in addition to that, I always prepare some videos every time there is a tax law change. I've been doing that for the last 2 years. As you can see, some of them have good reviews, up to 3,300 followers. I do it in my language, Tigrinya, but at the same time I do it in English. So for any tax law changes for the coming season, you can tune into my channel and see how the new tax rules will be applied now. And most importantly, I have a good team. These people are very qualified. Mr. Kiran, he was supposed to be here, but for the coronavirus reasons, he was not comfortable to be with us in this gathering. He's an accountant. He specializes in the DMV, sales taxes and related small business accounting. And this is Kevin, young guy, younger than me, and he's a tax consultant. He's an economics graduate. We'll be working together in one big tax firm. Now they will be working with me, and we are ready to provide you the quality service. We'll make sure to maximize your refunds, your legal refunds that you are entitled to, because the IRS wants you to do all the deductions that you are allowed to, and we are ready to make sure to get all these deductions if you provide us all legal documents, and then if you give us time for proper consultation to ask you questions, because the credits are a lot. So unless we sit down and discuss with you, we'll not be able to do that. If you come up, we'll make sure to capture them all. The services that we do is personal taxes, which we are preparing now for the current tax season. We do business taxes for partnerships and S corps that I mentioned a little bit earlier. Payroll for small business, bookkeeping. There are a lot of small businesses that I have been helping with, preparing their profit and loss statements to get approved for their loan applications, things like that. And we do their accounting as well. And some customers, even though they don't do tax with me, if they have been audited with the IRS, then we resolve their matters. We make amendments for their taxes. And we also help some people with consultation about setting up a business, and we make applications for them in the DMV especially. We do it all states, but now Mr. Kiran is the one who's going to helping me on specializing on these things, and mainly we do it now in the DMV, DC, Maryland, Virginia. The services, the features that we use, I already mentioned to you. We have virtual service, electronic signing. This is, I mean, there is an error again here. I apologize for my presentation, but we do free estimation. So you come to do your tax with us. If you are not happy with it, we are confident to make sure you get the maximum deductions. But if somehow you don't agree with it, you go for free. But we guarantee, legally, we make sure to capture and maximize all the deductions that you are entitled to. So you can contact us. The new location is going to be in Silver Spring downtown, next to Cardi's. I started in New Carton. This here is my website, not fancy one. I'm working with some IT people to improve it. Here is my email, here's a phone number. You can get the business card. You can reach out to me. This is IRS. Everybody once you receive a letter from the IRS in your mailbox, people get shocked. But I tell them, don't worry, just first read. Are they giving you money? Are they saying you are audited? Just read it first and then consult with us. But for me, this agency is the best agency in the United States. They are very fair, as long as they are documented, so we don't have to worry. And everything that we discussed about the deductions, things like that, it's not a secret. I'm not going to tell you something different from other tax preparers. It's all the same. It's all in this website. So if you don't have time to consult, you can come to us. But all the information is out there, and make sure you follow the rules. Be ferocious, but play by the rules. Yes. To have this event, I have two sponsors. I have wrapped up my presentation. We'll proceed to the Q&A sessions, but I want to tell you a little bit about my sponsors for happening this event. They are my partial sponsors, but I want to announce a little bit about them in front of you here. So this is Clinton Automotive Care. He's my brother, Daniel, I already mentioned to you. But if you have any different kinds of vehicles with this information, you can consult him, you can take his business card. He's doing a good job with so many clients with their vehicle problems. The second partial sponsor is Adulis Express. He's actually my partner, my friend. He's not with us because he's away in another state now for family reasons. But he does financial services. He sends money to Ethiopia, Eritrea, where I am from, for those who don't know me, Egypt, Israel, South Africa, Uganda, Europe, all these countries in Africa and the West, other parts of Africa. I thought like he was doing only in the East African region, but as you can see, he also has some services in Angola, Kenya, Saudi Arabia, on these countries. His location is in Silver Spring. I share an office with him, and he now recently he was approved to have his license for Virginia, Skyline area, and his information is on each table. You can take it, and I appreciate them for supporting me to have this event. What you can see here, this is when we were planning this event. There is no easy event. It's my first event to present. I don't know Raquel and Robert, but if you have done events, this is how we prepare this event. It looks so small, but these people are very helpful. I want to mention some names because a lot of people have been helping me, but some of them are not here, and I want to mention some names. So this guy here, he was the campaign manager. His brother Aman. Next thing, Mahir, he was very instrumental in everything, setting up this event. Thank you so much, Mahir. Alicia was also very talented in having the flyers, how we approach the people. There's another person who's not here, Fish. He was very helpful in marketing for me. Fish Balena, if you know him, those who are Eritreans, you know him very well. He's popular in this area, but he was helping me a lot. And another guy who helped me with the flyers in TikTok, Alex Photo, he's not here. He was very supportive. There are a lot of people who helped me to do this. Amin is here, like with the digital stuff, Instagram and social media stuff that he's helping me. But there are a lot of people helping me, and I appreciate them. But as you can see, it was not an easy task to do this planning, and I hope that you are getting some information, valuable information from the taxes and financial planning. And here, I want to tell Raquel and Robert, now we are popular in the DMV area. Because your pictures are all over around the city, as you can see here. So people are helping me to advertise for this event, but for the coronavirus reasons, a lot of people didn't come here. They have been texting me, they are watching us live on Instagram, and they have been texting me, we would love to, but for so many reasons, some of them they live with their grandparents, they don't want to risk it, but a lot of people are saying, we support you by displaying this flyer all over the DMV, and I would say thank you so much for everyone who helped with this. So that's how I wrap up my presentation. We'll proceed to the Q&A session. I apologize for the delay again. I think I took longer than I expected. But thank you so much for coming. DADA Tax Service. Our slogan is your current taxes, if you do it properly, it's going to be a lot of savings in the future for you. I'll hand over to my brother here if you want to refresh, but I'm sure you will have some questions for these wonderful speakers. I'll pass it on to you. Thank you so much.
How's everybody doing?
Wonderful.
Okay, great. Like I said, help yourselves with some candy. The candies, like I said, my brother's gonna take them. His kids are like, they're crazy about candies and stuff. So hurry up and get them. Next up, if you have any questions, I'll pass up the mics to you for Henok or for. Anybody with a question?
Why the name of DADA?
What does mean DADA? You don't mind?
Yeah, I don't mind. In fact, I was gonna say it later. Thank you so much, Jody, for saying that. DADA is, some people, like I said earlier, Mr. Kiran is going to help me. Mr. Kiran is Indian. When he saw the name, DADA has a meaning in India. I mean, I can't speak multiple languages, but India is not one of them. So he told me what the meaning of DADA is, and it has a meaning for me. DADA is my grandmother, who passed away 4 years ago. She died when she was 90, good age. But I grew up with her for the last 10 years of my life back home. And the legacy for her, I mean, it's a small business, like I said earlier, work in progress. But DADA is our grandma, which is the foundation of the whole family. Johnny, thank you so much. No, I cannot take my grandma.
Anybody else with a question?
You're not interested in financial planning? You can ask these people any question you have. Or Robert and Raquel, if you want to add something.
We either did a very good job or a very bad one, right? Then if there's no questions, is that the way it is?
Good job.
If you want to add something, Raquel and Robert.
Well, so I think a lot of times we're shy, right? And you know, finances is almost like is very personal, right? So what I have to say is that, you know, in our hopefully you pick up one of our books here, and I just want to read to you one of the statements from the beginning of the book, and it says that. It says, thank you, honey. All right, it says that, you know, 40% of Americans struggle to pay their bills on time. The average American household carries $16,000 in credit card debt. 44% say they could not cover an unexpected expense of over $400. So, you know, that's a lot of people today. Hopefully, you know, we are not in those statistics, but that's just what's happening around us. And then, it says it's possible that we don't know what we don't know. I know that's hard to swallow sometimes, right? Because we feel like we know everything, but it's not necessarily true. It says that even though the financial industry is one of the largest industries in the world, and even though we are flooded with financial news channels and websites, financial literacy is as murky as ever. Even hearing Henok go through the tax side of it, which is different, right? You know, a lot of times people go to their accountants asking for financial planning advice, and a lot of times people come to me looking for tax advice. It's different, right? Even hearing his presentation today, I learned quite a few new things. And that's why we always have to keep learning, right? A couple other things that they say here, you know, even though financial literacy is still as murky as ever, and we need to change. The task won't be easy, but we need understanding first. The old days of passive dependence have to end. A new era of proactivism and financial freedom must begin. So I'll jump to the bottom here, and it says, remember, there's nobody more interested in your financial future than you are. Definitely not the government or your employer. It's our responsibility to learn the simple rules of how money works. Understanding how money works is part of taking care of our family. We can do it, and we can control our future. So I read you that, and the one thing that I would like to say is that, you know, don't be shy to set up a free financial analysis. You know, it does not hurt to have somebody look at it. Hey, and if you're doing everything great, just, you know, pat yourself on the back and keep on going. But most of the time, you know, just like the tax industry, just like the medical industry, just like the technology industry is ever evolving, so is the financial industry. And we could be planning our finances as if we're carrying a pager. Nobody carry a pager anymore, right? Even the medical doctors don't carry a pager anymore. So we just have to be our best advocate. You know, if we are not seeking the information, very hard for us to come to us if we're not looking. So that's what I wanted to share. Thank you.
Thank you so much, Mika. So if you have tax questions, you can bring them up, but you can always also reach out to me. However, if you don't have any questions, we don't want to hold you longer. We'll proceed to our next steps.
Hi everybody, first thank you for the invitation, Henok. But it's first time to see him. I know him with his brother Daniel. Yeah, Charlie, I was expecting to hear a little bit about the SBA loan stuff, if I don't miss it. So can you tell us a little bit about that? Thank you.
Yeah, the SBA loans, as I have been applying for so many clients, there is nothing specific guideline when it comes to tax advantage, especially for this year, as of now. The tax laws has been very dynamic. It's been changing every time, new regulations, but there is no specific rules when it comes to tax savings among the SBA. However, the first year, there will not be any interest to be paid on that, and always for loans, it's the interest part that matters. So this year, we will not be expecting to see any impact for the SBA loans that we have been receiving. Is it advisable to take these loans? I mean, this is more of financial planning, but I have been consulting my customers when I was doing the applications, because I have been helping also with unemployment applications and things like that. It's worse, but like I said again, always in investments, it's the interest part that matters. But for the SBA, the first year is not taxable. So we should not be expecting any change when it comes to taxes for this year. Unless somebody has to add a little bit about loans.
Who's qualified for the loans?
Any self-employed person. Any self-employed, 1099 employee. It's any contractor. Like for example, I have done for so many Uber drivers, because they are 1099 employee. So it can be LLC, it can be any kind of small, not small, you cannot say small, but any self-employed person. I would put it that way. Because when you say self-employed, it can be S-corps, it can be partnerships, LLCs, sole proprietors, and also gig workers, which we call them gig, but like Uber, Lyft, and other related types of small businesses. One thing I would like to add in relation to that, some people always ask me, what is the best structure to set up your business? Is it a sole proprietor? Is it an LLC, a partnership, an S-corp? Especially now, like I said, if you have a business, you are in a better tax position because you have a W-2 income here. And once you write off your expenses, which are not allowed to write off as a W-2 employee, because a good example is you're working from home, you cannot write off all the expenses. Before Trump's tax law, I was able to deduct my mileage, my share office. There is something called home office expense percentage of your home office expense, and then you prorate all your home office expense, utilities, rent, and anything. Now you don't qualify for that if you have a W-2. So, what is a good strategy to have a good structure when you set up the business? For me, if you think you can make, this is very subjective by the way. It depends on the type of the business. It depends on how much money you forecast to make this year. But if you think you can make enough money this year, it's always advisable to do the S-corp structure. Because in S-corps, once you are an S-corp, you are an employee of the company, and then you can take your salary, let's say 40% of it, and the rest 60% is going to be a dividend for you. And we said earlier, dividends are taxed at a lower rate, like half of the ordinary rate. So instead of for you paying the Social Security, Medicare, and the higher tax rate, if you take your money as a dividend from your company, then you will be paying tax at a very low rate. So a lot of people have been taking the advantage of this structure. But when you say you take a salary, there is a regulation by the IRS. They just put it as reasonable salary. What's reasonable? It depends to the business. It depends how much you make. But once they audit you, if they think that you didn't take, you just made it up to take for the tax advantage, they will be, sending you a letter, and you will get a mail in your mailbox. What you should do is, according to them, it says reasonable, which is how much would you pay if you hired somebody in your business. But again, this has to be seen on individual matters. The type of business, if you come up to me, I can look your history of your taxes and I can consult you more. But if you don't think you're not going to make money in the coming 2-3 years, the first 2-3 years of your business, which happens for most business, startup is always hard. You don't make much money. I don't think it's wise for me to do S-corps, because if you do S-corp, you have taxes, you have to do, not taxes, you have to pay payroll taxes, which means you need an accountant to do your payroll every day. You have to issue a W-2. So that's also a cost. So your cost might be more than the benefits that you'll get in your taxes. And you have to weigh the balance. You have to do cost-benefit analysis. So early stage, if you don't make much savings, go with LLC. But if you think you can make enough money, S-corp would give you huge tax refunds. Tax benefits. Not necessarily refund, but you can get a big tax advantage. But like I said, it has to be on individual basis. The type of business you have, and there are so many factors that has to be looked at to determine what structure is the best one for you. There is no ideal one, but you can compare and analyze the options that you have. Any other question?
May I add a couple things?
Please.
So 2 things. One, I think I love the quote you had. It said, "Play by the rules, but be ferocious."
Yes.
Right. So, for instance, there's I don't know if anybody's ever read the book Cash Flow Quadrant by Robert Kiyosaki. Anybody? No.
LinkedIn.
No. Yes. No.
Yeah,
One person. Okay. Well, he talks about, the 4 quadrants, right? He talks about business owner, investor, self-employed, and employee. And basically, I think what Henok is trying to say is there's no, well, no, not no, sorry. There's very little tax advantages as an employee. Is that fair to say?
Well, I would agree.
You would or wouldn't?
I mean, yes and no.
As an employee?
Yeah.
Yeah.
With the current tax laws.
Yes.
Yes.
Yeah.
Okay.
Not none, but
Yeah.
not as many.
Yes.
So, you know, I think there's benefits to becoming even self-employed, even as a 1099, right? There's some benefits. Well, all I want to say there, without overstepping my bounds into taxes, is that, you know, sometimes we do something and it's a hobby. Like, let's say you do hair. Turn that hobby into a business, legitimately, and now you can benefit from the tax laws. Or maybe you bake cakes and you sell it as a hobby. Turn that hobby. I mean, I don't know if baking cakes as a hobby has any write-offs. That's a Henok question.
I'll answer next. Okay, answer it now?
You can, since we're on the topic.
So, first of all, I misunderstood you earlier. You're right. As an employee, you don't have a leeway. You know, like you don't have a chance to play around to be able to get advantage of so many tax credits. 100%. I agree. Especially the current tax law. That's why now we see an increase in small business applications.
Yeah.
People are registering. All these people that you're mentioning, they are doing it. We have been advising it, honestly. So any business, as long as you are documented, if you make money from what you do, hobby and business is different. I mean, like if you make money from somebody, then definitely that qualifies as a self-employment. The only thing the IRS wants is what? Proof of documentation. And the proof of documentation is, how did you earn the money? You can easily get your bank transfers. Now we have the technology, Zelle and other means of payments. And how you document your expenses. As long as you can prove this, any business, whether you do it from home, whether you do it on the streets, you are qualified for that. And by qualifying for that, you get a deduction. That maximizes your income. Again, if you make more income, you are making money. I mean, of course, you have to pay tax. But if you end up like losing, especially at the early stages of your business, and you have another income from other source of income, then definitely, when it comes to tax savings, it helps a lot. Even if it doesn't help you in the loss currently, then it can carry over. That's what Trump did. Previous losses, or the current losses, they can carry over against your other income in the future. All you need to do is just track your expense, be documented. That's what I always advise people, which means be ratios, be smart, but play by the rules. The rules are be documented.
I have two questions. First one is regarding the company structure. The first one is regarding the company structure.
Yes.
So you have like the option to change the LLC to S corps as your company grows and your financial is getting stronger and stronger. Okay. The second one is regarding the IRA. You said that there's like a tax advantage in depositing an IRA. You also said that if you want to take it out and you want to use it, then you're gonna pay tax for it. So what's the difference? Either way, you're gonna pay tax for it than for the money you deposit in your IRA. So what's the difference?
Okay. For the first question, the answer is yes. Because once you set up, there is a timeline that you have to make the application. We call it election. You elect to be taxed as an S corp. So for this year, if you elect to be taxed as an S corp by March 15, then that's okay. You can change it anytime. And that's what we advise people. Start as a LLC. You don't have to incur payroll taxes. Pay an accountant every month to do your payroll and stuff, which is going to be the cost higher than the benefit that you are getting. But you can elect in the subsequent years. But you have to make the application by the deadline, which is March 15. So the answer is yes. Did I answer your question? Yeah. The second one, the IRA. So IRA is, the government is encouraging people to defer, to save for retirement, so that they don't be dependent on the government when they are over 60 or whatever is the age for retirement. So by saving 401k is the best if your company has, because you're not just deferring your own money, but the company will be matching to you. And also for the IRA, if you are depositing the money now, you are avoiding the taxes this year, but the money will be saved and invested. It's not a saving account. The IRA is invested. So it will grow, but by the time you withdraw the money, by the time you can't even reach the date of that you can distribute your IRS, the difference is you have a higher deduction when you are over 65. So now you will not be getting a higher deduction even if you take the money now. So yes, you pay tax on it, but the money will be invested. Currently, you will not be paying tax, Social Security and Medicare. But if you are over 65, you have a higher deduction because you are approaching the retirement age. But something that Robert and Raquel didn't emphasize, but they mentioned it as a group of investments. That's the Rosa IRA. So when it comes to Rosa IRA, you pay tax now. You get the money after tax, but once you invest it grows tax-free. So the gross amount that you paid now, the gross amount that you deposit in the Rosa account, once it's invested, let's say you put 10,000, by the retirement age, if it's 12,000, the 10,000 has already paid tax because it's after tax savings, but the 2,000 is not going to be taxed. So you have free tax.
And I will say that this is when we work together for your benefit. So you're using the IRA as a tax deferment vehicle to shrink your current taxable income potentially. So that way, if let's say you are in the 22 percentile tax bracket and just throwing in the 6,000 will bump you down, then that may benefit you now. You kick the can down the road for the taxes, which is okay because we don't know what that's going to look like. But more importantly, you can also say, well, I can also kind of throttle how much I am accessing from that IRA, which will determine the taxes at that point. If I'm doing a Roth IRA, I have to pay the taxes on the money I'm putting in there today. But as long as I take it after 59 and a half or 5 years, depending on which is greater, I will not pay any taxes on any of the gains. But it can be the same exact investment vehicle, whether it's a mutual fund, a stock, a bond, an ETF. It can be both the same vehicle. But I'm also limited on that $6,000 limit is for both. So I can't do $6,000 in a traditional IRA and $6,000 into a Roth IRA. I can only have $6,000 total between all of those accounts. Does that make sense?
Yeah.
Does that answer the question?
There's a penalty if you want to take it out like early.
If you take it out early, yes. So if you take out or try to access either one of them, first you'll pay 10% penalty. And then you'll pay taxes on top of it. But the 10% is separate from the taxes of what you're taking out. And that's where he would come in and say, oh, by the way, you got to pay the penalty and you have to pay the taxes.
Can I add?
Yes.
Okay. Can I show you before you answer here?
Yeah, sure.
So this is what Robert was saying here. So now, let's say you make, by the retirement age, if you will not have, you will be under the lower tax bracket because you will not have more income. So your tax bracket will be lower here. But now you are making enough money to put you down to the higher tax brackets. So basically, let me put it this way: instead of paying 37% now, you are going to pay 10% later. You know what I mean? Like, that's how I would try to explain. Raquel, I'm sorry.
Yeah, no. That's fine. I'm gonna answer the question from a different standpoint. So let's say a lot of us, we may have 5,000, 1,000, 2,000, 10,000, whatever, sitting in the bank, right? Right now, it's sitting in a saving account. If it earns enough interest, it's taxed, right? Or maybe we have some money sitting in just a brokerage account, which is basically a saving account that's taxable, right? Maybe an E-Trade account or something like that. What I want to get to is, why would you want to put that, why would you not want it to just be a regular brokerage account? Why would you want to make it an IRA? Here's a very simple way to think about it. So let's imagine, for easy math, can I use 10%? Yeah, I'm not guaranteeing 10%. I'm just using it as an easy math for me, right? So imagine I have just a regular saving account giving me 10%. And then if you remember, we had a slide that says tax now, tax later, tax advantage, right? If it's in a taxable investment, then at the end of the year, I have to pay some taxes. So let's imagine my taxes is 30%. I'm making it up right now for easy math, right? So technically, if I have 10,000, it earns 10%. That's $1,000 I earned. I have to pay taxes on it. So really, by the time I'm done, maybe like 700 continue to grow for me. You follow me? Now, so instead of $1,000 earning me interest next year, or instead of 1,000 plus my 10,000 earning me interest next year, if it's taxable, it's 10,700 earning me interest, right? So which one would earn me more interest? The 10,700 or the 11,000? 11,000, right? So I think we are not really educated in society on the power of tax deferral. Whether we set it up as an IRA, which at 59 and a half years old, so the penalty is there. If you take money out, then you have taxes plus penalty if you're under 59 and a half. If you wait till 59 and a half, the penalty goes away. If it's an IRA, you still have to pay taxes on the gain. But you were deferring that, so you had basically the full 10% compounding for you instead of 10 minus taxes, 10 minus taxes, 10 minus taxes. So if you look at it, just deferring the tax, there's a great benefit in that by itself. And then if you make it a Roth IRA, you will not be able to deduct your contributions now, but the gain later on will be tax-free. So hopefully I simplified it a little bit.
Yeah, definitely.
Yeah.
Thank you so much.
Because too many people have money sitting in savings, earning little and paying a lot of tax.
Yeah, nobody became wealthy doing that.
All right, I think we are running out of time. We'll go to our next and interesting part of this event. If you have one more question, we'll accept, but we'll have to proceed as we are approaching the time limit for the event, for the hotel. So, if you don't have any questions, we'll proceed.
About the donation, church can be considered.
Yes, 100%. In fact, yes, church is the number one list that comes, and you can deduct up to 50% of your income. I'm not sure, Johnny, you are interested in giving 50% of your income?
No, the last 2 years, it wasn't considered like deductible. That's why I just want to emphasize.
Yeah, like I said previously, in order to qualify for donation, it has to be added with the other itemized list. Now, they are saying, because of the coronavirus, here it is. So donation is here, okay? If you don't have a mortgage and you pay 2,000 donations, you lose it, because instead of taking the total 2,000, if you don't have a mortgage, I'm saying, you don't want to take the deduction of 2,000, right? You would definitely go by the standard 1,200, which means they are losing the donation. Now they are saying you will take the standard because your itemized list is not more than 12,200, and now this donation will be separately treated, like the other adjustments, like the IRA and other adjustments, which means you will take deduction of this and whatever donation you have done from this year. And this is going to be enacted by the end of December, but for 2018, the 1040 has been amended. If you look, the 1040 form, the new form by the IRS, you will see the donation is above the line, which is with adjustments. Make sense?
Thank you.
Clear, Johnny?
Yeah.
All right, then. So we don't want to make this event very boring, long session. We want to go some interesting part of it. Aman, can you? So we have a raffle for today. just as an appreciation for you. I hope you enjoy the refreshment, but we'll have a raffle. So don't get surprised why we put the TV here. One of you will take this TV home as an appreciation for coming here. We'll have another 2 rewards as well. I have it on my hand. And Aman is going to announce the winners. And somebody, I hope, who has a car will be taking the TV so that he can lift you. So Alicia is here. She has numbers.
Can I take the corner?
Can you please welcome this talented lady that happened this event? So we will be announcing the third winner. The raffle. And the third winner is going to be. It's going to be 50% tax off when you come next year, which is beer taxes.
Okay, so 341035. There's a blue ticket. So 341035.
I hope not.
You got it?
Yeah, you guys did. Wow.
So, James is my ex-colleague, and next year he comes, he will be the winner for Amy. I want to make sure the number is right. Hold on.
Yeah, he's good.
Right. So, Robert, hold on, James. Can you give this reward for James, please? As an appreciation, Robert is going to hand. So this is a coupon. Next year is a 50% cancel.
So the next one is 341033. What did you win?
The second winner is going to be 100% tax off. Next year, I want to have hotel coming. Apparently, he's like an existing client. I was hoping I'll get new clients, but it's fine. Okay. Can I be in the raffle or? You can be?
Yeah, you can be, of course.
So, the winner of the first round, Alicia is going to announce.
Yes, so who is going to win this TV? So 341026.
Make sure the number is correct. Hold on.
Yes, congratulations.
Don't congratulate him, hold on. And I want to have this, the winner, the first winner. My brother Daniel to hand over this TV. One of my sponsors. So I'm sure he can lift it up because he's a mechanic, he can do that. What's your name again? Sorry. Can I have the mic for him? Come on.
My name is Tamara.
Can I ask you 2 questions before you go? You take it. So, I mean,
Yeah, stay away from the
say
candy.
something because we are live for our friends. So,
I don't have anything to say. I came with my friend. He told me about the event, so I have my own. So he told me about the event.
and how did you hear about the event? Oh, LinkedIn. I'm sorry. Oh, Mary's page. Okay. Yeah. Thank you so much. So, do you have a car or you can be metro? Okay, then, so you can be lifted up. Okay, congratulations. Okay, everyone. So we're done with the event, but I want everyone to take a picture with the logo here. Please make sure you take a picture with me or by yourselves with this logo, and then make sure you post it on your social media accounts. That helps announce the business. We have a good logo here, and I hope everybody's going to come here. Thank you so much. And make sure you get this financial information book from WFG. Make sure you take one, that's very valuable.